All right, good morning, everyone. Sorry about the late start. Let's keep going. All right, S&P, U.S. markets overall had a good afternoon yesterday. More or less kind of sideways action after the initial spike up. Um, just more or less recovering losses from the first couple sessions of the year. You can see there every sector up on the board was up except for materials. And I think what really gave the market the added boost was the trade deficit number. We had the lowest trade deficit in the States since 2009. I think mostly because of less oil imports, but nevertheless, I think very positive for the economy. I saw a lot of economists revise their growth forecasts for the fourth quarter up as high as 4 point odd percent. So several guys going over 4%, a couple guys going right up to 4%, and that's obviously very positive. It kind of gives a little more credence to the fact that some of these guys have really been pumping up the GDP forecast for 2014 over the last couple months. We saw Asian markets mostly up across the board. A couple of the markets were a bit flattish. Aussie was basically flat. Kospi, Shanghai managed to squeak out a gain, I think, at the end of the day. But we did have a nice session out of the Nikkei, solid session out of the Hang Seng as well. You saw the yen, which is starting to weaken again against the dollar, and mostly everything weakening a little bit against the dollar on the back of that trade deficit number. So I think this year could be, the year of the dollar. We'll talk about that a little bit more in detail once we get into the maps, but that could obviously greatly affect, certain sectors in the equity market this year. So we'll talk about that in a little bit. All right. In terms of corporate action, we had Anglos, which is cut to underweight versus neutral at J.P. Morgan. That's quite interesting that's come just at this time. I'm not really sure what the catalyst to that would be. But anyway, so just keep that in mind today. Market data, we have a lot of numbers out of Germany early, the trade balance, exports, imports, and current account balance. We have Halifax house prices in the UK. We've got retail sales out in Europe as well as the unemployment rate. We've got factory orders in Germany later at 1. Then in the States, we've got MBA mortgage apps, ADP employment change, and then the Fed's going to release the minutes from the December meeting. All right, let's jump into the maps real quick. All right, first thing I wanted to actually have a look at is, I believe, the Euro USD, and we're just going to jump a little bit further into the trade deficit story and how that's going. The first thing we're going to look at here is the U.S. dollar euro. I had a long chat with some of the guys yesterday, and talking about the possibility that this could kind of be the year of the dollar here. Obviously you've seen the U.S. economy, which is really starting to pump. We saw the trade deficit numbers yesterday, which obviously, there have been some people talking about that we could get to a surplus, a surplus this year, which would be the first. I don't even know when the last time that's been. It must have been freaking 100 years since that's 20, 30 years since that's happened in the States, if not more. And obviously that's a strengthening effect in the dollar. That's gonna do a lot of things. It's going to do a lot of things in terms of the FX market, which also have impacts across certain sectors, commodity demands, etc. So just keep that in mind. The stocks that are generating a lot of revenues, in dollar-based things, I think are probably going to be more due to benefit that. That's really where I think we could be this year if we break through this level in the Euro USD, which is really about 136. If we just take this all the way up. To the edge there, about 136. If we can snap through 136 on the euro dollar, we're talking about a nice move. I would think a quick move, at least to kind of 132, and then I think we can even test all the way down to the lows this year. So long as things continue to go well, we've got this inflation and in Europe, the States, you can start to see we're starting to get a little bit of inflation, deficit starting to shrink, growth's back up there. To me, everything's in the dollar's favor at the moment, and then also that's going to kind of carry over into the U.S. dollar yen as well, which I think is really just kind of building into a little bit of a continuation pattern, probably about to, not that far away from spiking above previous highs, making a little bit of a mini flag there. And I think that those are going to be the plays for this year, and playing some of the stocks that'll be affected around positively affected around those, or negatively affected, whichever way you're playing it, around those currency adjustments. All right, the next thing we're going to look at here is the FTSE. Back out here all the way to a 1 year. I'm going to look here. I'm going to take this from the closing basis because these things get quite wicky. On a closing basis, we literally closed right on resistance for the FTSE. This morning we're looking up 1.5 points in the FTSE on the open, but I really think that you can see this whole way the FTSE's been a major laggard, and that's been with their economy actually doing reasonably well of recent. I think some of the lag has been from the fear of monetary policy starting to come off the boil a little bit here, but you can see how the pullback's getting less and less below this trend line here, and I think that this little consolidation that we've just had just below trend line resistance is important. I think we can make that next move up in the FTSE. Hopefully it'll give us a boost in our mining stocks, which the FTSE is obviously very heavily laden in mining stocks, and we've got a lot of dual listeds there. Carrying on with the mining theme, we'll just have a look at Exxaro, which really kind of failed yesterday at this 152 level, which is really a 200-day moving average, and you can see the significance of it in terms of trend resistance, in terms of lateral resistance as well. That level goes all the way back and to a couple points back earlier in the year as well. I'll back out a little bit more there, and you can kind of have a better look at it. So we did fail that level. We also kind of popping up there close to 50% fib retracement levels on this move, which would literally only be about a buck or two higher. So I think this could be one to watch, and I also think it's important to watch these in terms of kind of leading indicators and what we're going to be looking for out of cyclicals this year. I really think this could be the year for cyclicals versus defensives. In my mind, everything's set up for that. You don't buy defensives typically when you're expecting 4% growth out of the States. You're buying cyclicals. Cyclicals have been a big underperformer to an extent over the last little while. So I think that could carry on the rest of this year. Sorry, this is Kumba. Kumba, we'll have a look. I want to just kind of show we also failing a little bit here at some sort of trend resistance on Kumba, same sort of thing, right at its 200-day moving average. So that combined with Exxaro, both kind of looking a little bit similar. To see these things kind of be able to break above these resistance levels, if they were, would be very bullish, I think, like I said, for our cyclicals, for our mining stocks. So just keep an eye on those. And the last one I'm actually going to show is Sasol. Sasol also, obviously, not mining, but same sort of sector, more or less, energy. You can see there we really popped over I think we made a bit of a breakout yesterday. Let's zoom in a little bit on that. And you can really just see in a closing basis, we did break out. We also had this nice little consolidation just below resistance here at 20. I mean, we tested 20, I think, 2 or 3 out of these last 4 or 5 days. Really just consolidated between about 512 and 520. And we managed to push higher yesterday. It really did outperform. I mean, it did sink a lot during the U.S. hours. We pulled back quite a bit, all the way down to about 516 equivalent. But the bottom line is that this thing traded incredibly well yesterday. If we can hang above 520 for the next day or two, I think Sasol's got a much higher target. Possibly as high as, possibly as high as 560 rand. So keep that in mind over the next couple sessions if we can stay above top 520. That's it for today, guys. Thanks a lot.